I'll try to keep this as short as possible, but I just want to acknowledge just a bad beat, something that happened that I think will send shockwaves through the political and Christian ecosystem, which is the death of Charlie Kirk, the assassination, more specifically, of Charlie Kirk. If you're not familiar who he is, he ran an organization, a youth organization called Turning Point USA. He's been running that since he was, I believe, 18. He's 31 now, leaves behind a wife and two super young kids that'll never know him. That, on its face, no matter what the story is or who it is, always hits closely to me since I got three kids, 9, 6, and 3. Anyways, he was an advocate for Christian and traditional and conservative values and is credited in a huge way of shifting the youth movement in the U.S. towards Trump during the 2024 presidential election. But it just goes to show there's no doubt a poison in the political discourse where opinions and talking freely is seen as vile, poisonous, which it shouldn't be. I think even when it comes to talking about investing, whether it's income investing, growth investing, dividend investing, I don't think it really matters. To me, all I care about is you on the other side of this camera just coming to the table to get into the world of investing. That's ultimately what matters. I don't care if you're in crypto, bonds. There's certainly I certainly have stronger opinions on things like bonds and crypto if you follow the channel for any length of time. But at the end of the day, I don't care. It's just what brings you to the table to ultimately start your investing journey. And certainly the online discourse can get muddy at times especially with income investing, rise in popularity, and there's certainly people that just do not like that. They think it's a scam, and they're not shy to say that. But at the end of the day, I'm putting my opinions here on YouTube to hopefully shape that discourse, or at least have a hand in leading that. And ultimately, you guys have made this experience actually pretty enjoyable overall. It has not been a rocky ride. I think being open about the journey of finance has I think helped kind of maybe shield me from some of the criticisms. It's like I'm perfectly willing to be open to say that was a mistake. This is what I'm doing. I want to, as best I can, lay out the roadmap as far as what it's like to invest in Covered Call ETFs. So it was a little bit of a segue there, but prayers are with the family, with the Kirk family, and of course everybody who follows him very closely, because the world really does need people like Charlie Kirk. Absolutely, I 100% agree with that. I doubt any other channels in this realm are gonna touch this one, but I will, because I don't care. All right, so let's get into why you're here. Let's talk about HHIS. Let's talk about BIGY. There's so much to get to on this, and if you've been following my Blossom portfolio, I just sold off a ton of stuff today. Why? Is because the apocalypse is upon us? No. Do I sell out of fear? Absolutely not, and neither should you. It should always be from a point of view of preparation for something else, for something bigger, a greater plan, but I'm going to get to that in another video. So in this one, we want to discuss this press release. It was the day one trading of BIGY, the Evolve US Equity Ultra Yield ETF begins trading today on the TSX, which is September 10th. That's when I'm recording this video. And if you're really trying to get an idea of what BIGY is, this one is probably one of the more anticipated releases. Why? Because us in the social media sphere of things understand that this is a direct competitor to Harvest's HHIS, okay, which is a really popular fund. We got it right. Whoops. Sorry, guys. Let me fix that. Where are we here? Okay, let's float on top. There we go. So what is HHIS? The Harvest Diversified High Income Shares ETF. It invests in the most volatile, well, some of the biggest companies with the most volatility. You can see here Coinbase, Broadcom, Nvidia, a lot of technology, communications. Anyways, it's the big players. You got a couple of low volatility movers like Costco and Eli Lilly, but nonetheless, everything else in there is just right. This is what creates big premiums. And right now, HHIS has around a forward-looking yield of 23%. But BIGY comes in, smashes the door down, and says, "Hold on, Harvest, not so fast." You're like, Harvest, I gotta say, I would say is really leading the charge out of all the fund managers right now. I went to the Blossom event in Vancouver, and I told them as much. They have a couple of regional people out here in Vancouver. I believe 3, but I just told them that it's like, you guys have the momentum, like bar none. It's not not that it's not close. It's just they are clearly the ones to chase, like for any fund manager. So what does Evolve do? Well, in late August, they announced that they're going to release the BIGY, the Evolve US Equity Ultra Yield ETF. And there's clearly going to be a suite of these kinds of ETFs to come. They got Maple, which is the Canadian version, coming soon, which is going to be a direct competitor to Harvest's HHIC, the all-in-one for single stock ETFs. And let's just be clear, HHIS is an all-in-one wrapper for a bunch of single stock covered call ETFs, about 15. All right, so what's this press release comes out. I posted this on Blossom first thing when it came out, and it basically gives us what the distribution is going to be. It's going to be a bi-monthly pair. They probably will go to weekly once regulation. I'm not really sure exactly what it is, but the infrastructure around weekly distributions is a bit of an enigma. They're just not able to do that, I guess, at the moment, but they can do by monthly. So this is what it's going to be. And you got a starting distribution payable on October 8th at 31 and a quarter cents. Okay, so that's going to make BIGY a 30% yielder roughly, whereas HHIS has that forward-looking yield of 23%. Keep in mind, when we talk about yields in this manner, we are talking about the forward-looking yield. It's assuming that this distribution holds steady, minimum, and we correlate it out 12 months. And so if it holds true, this would be around a 30% yield. Okay. These guys aren't going to post it on their website because by regulation they can't. They only post it after 1 year, and they do the trailing 12-month yield. Whereas typically on this channel, other income channels, we talk about the 12-month forward-looking yield based on, of course, newer funds. And so what's so special about BIGY? Well, where HHIS uses 25% leverage on 15 single stock covered call ETFs, all in one wrapper, BIGY does not do that. It is not a wrapper for a bunch of all-in-ones. It just holds 10 of the biggest companies on the S&P 500, basically. It's going to choose stocks based on size and volatility and the kinds of premiums that it can roughly generate. But of course, go to the website, read about it. I'm going to link that in the description below. But where HHIS has 25% leverage, this has 33% leverage. So basically at this point now, it is basically another competition of hold my beer, okay? I've talked about this before, where it's like 25% leverage. Now it's 33. Next, we'll see 50% leverage, and then more cover call writing so that the yields get bigger to attract more AUM. I don't fault the fund managers for that. It's just that it's right. They're trying to please their owners and whoever has a stake in these companies. It's like, covered call ETFs are very popular right now, so it's like, what's the next thing we can jump on? But my goodness, there's just so much out there right now that it's almost overwhelming. Like it's like Netflix, and you're kind of just scrolling through, just sort of like in paralysis of, I don't even know what to watch tonight with with Bay. Anyway, so Bay, BAE, anyway, before anyone else. That's I don't know, that's like what, Gen X language, not Gen X, that's like millennial language for you guys. Okay, so we'll go to the BIGY fund page. What does it hold? Where is its holdings? Gosh, there's so much to get to in this. It basically holds the Mag 7 plus 3 others. So instead of 15 stocks, you get a more concentrated version of HHIS, slightly more leverage, volatility, and market cap weighted for the 10 stocks that are going to be inside of BIGY. Now, what I like about BIGY over HHIS, which I think is to BIGY's benefit, is HHIS has to create single stock ETFs so that it can place inside the HHIS wrapper. Whereas BIGY doesn't need to do that. It can just swap out stuff at any point. So that was honestly, I was a big holder of HHIS, but that was kind of my only gripe. I don't even think I've mentioned that on any video, but anyway, that was my only gripe. They couldn't easily switch out anything if the strategy needed to, whereas BIGY can. So that is kind of, so the big question is will BIGY rival HHIS? Well, HHIS has had basically a 9-month head start on BIGY. It's amassed an incredible, get this, where is it here? Where's the AUM? $853 million in 9 months. So for Canada, that kind of AUM is insanity. Nothing has competed with this. It's quite clear. Anytime I talk about HHIS, the videos boom. Okay, so if I wanted to just make a boatload of cash on YouTube from ad revenue, which honestly isn't that much, so I can't even say boatload of money, but if all I want to, I would just talk about HHIS ad nauseum. But so BIGY has some big shoes to fill, that's for sure, and Harvest has momentum behind them, so is that going to be enough for BIGY to overtake it? I think it's hard to say, but I think I think it'll give HHIS a run for its money. I think for sure it will be. Maybe not initially, but give it some time. And I think you may see people kind of, play HHIS for BIGY based on maybe unrealized gains to at least get into a fund that's kind of similar, maybe cash out of HHIS, maybe because you've racked up some unrealized gains. I could see people doing that. Actually, it'll be for another video, but that is like one of the reasons why I got out of HHIS, because I am gonna just direct it into BIGY. Again, I've said this like now for years at this point. If a fund starts racking up too much unrealized gains, as an income investor, you got to realize that to me is dead money. That's like not even working for income. So if ideally I can put that into an equivalent fund or a superior fund. So I've done this in the past with other funds. I've gone from funds like a really powerful, strong fund like HTAE by Harvest, technology focused, much more growth oriented, so price heavier on its total return than distribution, but I swapped it out for QQQY by Evolve, which is more concentrated in the tech aspect of the NASDAQ 100. And I did that because I wanted to get more of my total return through the distribution. It jacked the yield up from 11 to 15% roughly when I made that move. So in this case, I'll just say that could be one way that you could look at maybe people moving from HHIS over to BIGY is to just take advantage of that yield. It's kind of a similar fund. It's got some characteristics, like I mentioned, with the holdings, slightly more concentrated. But honestly, at this point, if you own a pile of American covered call ETFs, the overlap is probably quite considerable at this point. I guess we should also just touch on management fees. I believe it's equal. We got 40 basis points for BIGY and HHIS. It says 0, but it's just going to track the underlying, which means it's 40 basis points. So you're not getting anything different in that regard. So it will be interesting to see how the price performance is. HHIS, it's underlying assets. They write on up to, I believe it's up to 50% of the portfolio, leaving the other half unbound, can do as the underlying does for performance. Whereas I believe, I don't want to speak out of turn here with BIGY. So again, look to the prospectus. I believe they can write up to 100. And we're back from the jump cut. So it says here, cover the strategy or the investment objective. I don't want to leave you guys hanging and speak out of turn here. But I was right. The cover call options will be written by the manager at its discretion on up to 100% of the securities of the portfolio at any given time. Evolve may invest in option contracts with very short time expiration, including 0 DTE. So I guess as 0 DTE expands beyond the indexes into single stocks, then they are giving themselves the option to do that. So they're certainly forward thinking in that regard. Now, like I said, HHIS will do up to 50. These guys will do up to 100. If they write on 100, I actually think that I know this for those guys over at Evolve. I've spoken to them on so many occasions. That would be like a horrendous. They cannot do that. Absolutely cannot do that. They need to allow for price appreciation. They need to preserve NAV. That is absolutely critical to the success of this fund. If they're just going to do some sort of replication of some yield max fund, which I know I'm absolutely positive they're not going to be doing that. But if they were, then you are going to get some massive DROC, which is destructive return of capital, which is going to be a lot of this. It's going to be and then so slight ups, then mostly down, slight up, then mostly downs. Okay, call it what you will, NAV erosion, NAV depletion. I don't care what you call it. The fact of the matter is you need the cap gains to preserve your net asset value. Absolutely critical if you are going to be a long-term income investor. So critical. So so I would imagine these guys, probably in-house, maybe sometimes they go a little bit heavier, but I would hopefully they do maybe just internally just do up to 50%, and then but I'll hopefully get some more info for you guys in that regard. But based on the other Evolve products, that's not really a thing. So I don't know why this one would deviate. And also too, it's because it's so concentrated, people might hear 30% and think that that's absolutely wild and that's like it's a clown show. But the thing is, HHIS proves, you can get fairly concentrated, you can employ some leverage, and then it's not like the 25%, 30%. It's not as crazy as if you're newer to this, or you're not as familiar with covered call ETFs, it's not as crazy as you might think. Of course, if you're going to throw call options on an index, it's going to be lower because you're spreading it across potentially 500 companies versus, say, the most volatile across the entire market in a concentrated manner like we have here with BIGY. So all in all, I think BIGY will certainly give HHIS a run for its money. I will be investing in BIGY. I really like HHIS. I think there's still probably room in my portfolio for HHIS. I'll do a whole separate video on that because I sold off a lot of stuff. The market has just ripped over the course of the last couple of days, and the timing just kind of worked out really well for that. So what are you getting all in all with BIGY? Slightly more concentrated, slightly more leverage, a slightly bigger yield at 30%. You got that 33% leverage. This is the second fund in Canada with covered call writing that, well, I will speak specifically to the covered call ETFs, the ones that I'm aware of. It's only the second fund to employ that 33% leverage. Of course, BMAX was the first at 33%, which usually yields around 10% for those who are curious about BMAX by Brompton funds. And, I think HHIS will keep chugging along as for now. But I think, BIGY, it'll pick up steam. It might take a while to get to that comparative AUM level. But I think the broader community sees this as the HHIS alternative. Will there be a third one by some other fund manager? I wouldn't be surprised. These guys are in hot competition with one another. Nobody really has a patent on a strategy. Basically, everybody just sees what the other fund manager is doing, and they just try to figure out how to make it maybe cheaper to operate, maybe a little bit better in some other fashion. So anyways, hopefully you enjoyed this this small reveal of what HHIS and BIGY is all about, and I'll see you all in the next video.